live from the Money Mantra, and we are back with another Forex education video. This channel was created to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome or welcome back to my channel. If you do get to the end of this video and you find that it's helpful, make sure that you subscribe, hit the notification bell, and always check out the community tab for announcements. Now, in today's quick video, we're going to be talking about the importance of time frames in trading. This is something that seems to throw a lot of traders off, and it can also throw you off when finding your entry and exit points if you don't really know which time frame is best for you. Now, if you are completely new to trading, you should know that some markets are open Monday through Friday and some markets are open 24/7. However, you can come in and analyze your charts at any time. Now, for me, I like to use TradingView. TradingView has a whole list of free tools that you can use to find your entries and enter profitable trades. But if you do want to create a TradingView account and start trading today, you can find the link down below in my description box. Now, ways that you can analyze the market will be found at the top left of your chart. These are the time frames you have the option for. But if you are a position trader, which means you're in your trades for a really long time, you can even look at your trades for 1 month, 3 months, 6 months, or the entire year. If you like a particular time frame, once you get used to it, you can just add a star next to it and you'll see it'll be added to your favorites. Now, these are the time frames that I typically look at when entering my trades because I am a swing trader, which means I don't mind staying in my trades for a couple of days. But you may be a day trader or a scalper, and you can use the smaller time frames. Now, I like to do a multiple time frame analysis just to make sure that I am finding the absolute best entry for my trade. So what this means is that I'm going to be looking at the market over a period of multiple time frames in order to find the best entry for myself. So I'm going to put the chart in replay mode and we're going to go back to here. And this is the 4-hour chart. Now you can start on any time frame that you like, but the purpose of a multiple time frame analysis is to look at the market over a number of time frames and then find your best entry on a smaller time frame. So the market is has a certain structure that it follows. You'll always see that sometimes it's going up, sometimes it's going down, sometimes it's going up, sometimes it's going down. And this can be for an extended period of time. Since this is the 4-hour chart, each one of these candles are forming over the course of 4 hours. So this was actually probably a couple of days that we're looking at. But if you wanted to look at it even smaller, we can say that the market went up for this 4-hour period of time and down for this 4-hour period, down for this 4-hour period, down for this 4-hour period, and up for this 4-hour period. I like to look at things on a bigger scale first because it just lets me get more information and then I can find more details on the smaller time frame. So areas of resistance are typically where the market will sell. You'll find them at the top of the chart or at the top of a buying trend. And when the market has a hard time getting any higher, it will start to resist and sell. Now you know that this is a strong area of resistance if you can find multiple rejections at that level. So I can see price rejected here at one point in time, and then we have multiple rejections on this side as well, making that a strong area of resistance. I would say look for at least 2 to 4 touches at that area to signify it as a key zone. But if you guys have other ways of determining your support and resistance or key levels, please let me know down below in the comments. Now, the opposite of resistance is going to be an area of support. And the area of support will be a place where you can see the market had a lot of activity at the bottom. It had a few touches there, and then it went up. So this can be considered an area of support simply because we do see that the market has at least 2 to 4 touches where it came to this level and then it pushed up. Now, if you guys can see that, just go ahead and comment market structure down below so I know that you are following me. So on the 4 hour time frame, we can see we found areas of resistance and we've found areas of support. Now, when you are selling, let's look here for a second. When you are selling, if you enter for a sell, your take profit should probably be at a previous level of support. Because remember, if the market is going up and down and it's created a structure, previous levels will always be revisited, and this will help you actually find your entry points. So if we would have sold here and set our TP here at a previous low, we can see that the market did in fact revisit that level. So that's all I did. And now we're going to go down to the hour time frame and we're going to see if we're still getting sell confirmations or if we are seeing something different. So this is 4 hours. Now we're going to go down to the next smallest time frame, right? So once we get on this time frame, we can see a little bit more details. We can see those rejections a little bit more clearly. And if you can see those, just go ahead and like the video so I know that you're still here. And we can see how we have a level of support, right? We see it even more clearly how we have those taps here. Now, on my stochastic, which is the only indicator I have, when I look at it on the hour, I'm getting very clear sell signals. And this is how I use the stochastic. You guys can write this down or rewatch this part. I ask myself three questions. So the first question is the stochastic facing up or down? If the stochastic is facing up, most likely the market will be pushing up as well, as we can see from these examples that I am highlighting. I ask myself which line is on top, blue or orange. Again, we can see when the blue line is on top, that tends to align for a buy. And the next thing I look at for the stochastic is, has it crossed above or below any of these key levels? Usually when it crosses above, those things align with the buy. And when it crosses below, those things align with the sell. So let's look and see what our stochastic is doing. We can see it is facing down. That's a bearish confirmation. We can see the orange line is on top. That is another bearish confirmation. And we can see one or both of those lines are below 50, which is a key level. So we got selling confirmations on the 4 hour. We also have selling confirmations on the 1 hour as well. So far we have bearish confluence on two time frames, making a strong case for a sell. Now we can go down to the 15-minute and we can see additional levels of support like here that we can target or even here, right? Because the more you zoom in, the more key levels you will see based on that time frame. So because we have this, we can actually add another line here because we can see on the 15-minute, this was a smaller time frame. So instead of waiting for the market to come all the way back down, right, to the 4 hour low to take our entry for the potential sell, we can take it on the 15 because we're still getting our strong selling here. We actually get the break of structure on this candle. For me, a break of structure is confirmation to enter. And I'm still getting my strong bearish confirmations on the stochastic as well. So once we go in and actually sell on the 5-minute, right? I mean, sell on the 15 instead of the 4, we can sell here, set our stop loss above a previous high, and then just use that very next TP, that very next level for our TP, and we can see what happens in this trade. So we can see that our take profit was hit simply because we found that bearish confluence on all time frames. Now, the same thing can happen for a buy as well. We will go through a buy example, but if this is making sense to you, just go ahead and like the video and subscribe to the channel so that you never miss when I post new videos. So this time we are going to be looking for a buy, and let's just go ahead and rewind, right? So we are going to come in here and we're going to do the same thing. No matter if you're buying or selling, you always want to mark your support and resistance first. So we have an area of support where we can see one, two, three touches and the market goes up. Next thing we're going to do is start to mark those areas of resistance. And remember, the easiest way to do this is just to look where you have a bunch of touches on that zone. It's either going to be a strong area of support, resistance, or both, depending if the market has switched. So when we come here to the 4-hour time frame, we can see that we do have the market at a strong level of support, and we're starting to have buy confirmations on the stochastic. It is facing up. The blue line is on top. And only one of the lines has crossed above 20 so far. So far we are looking good for the bullish, right? And you don't just want to automatically say, I'm analyzing this for a buy. You want to count your confirmations and see what's going on and see if you have more confirmations for the buy or for the sell. So we come down to the hour time frame. We're getting a very strong bullish confirmation on the stochastic. It's facing up with the blue line on top, right? One line has crossed above 50, the other is above 20. This is looking like a really good trade for a buy. So you can enter on the 1 hour since you do have that confluence on the 4 and the 1, or you can take it down to a smaller time frame to see even more key levels, right? So if we take it down in this time frame, we see another key level with another positive break of structure with more positive reinforcement on the stochastic. We can go ahead and take our entries here, right? So let's say we enter for a buy. We set our stop loss at a previous low. And we're going to go ahead and set our TP at the next level on the 15, right? Instead of waiting it to revisit the 4-hour high. So we're in this buy. We can see it going up, and we can see that within a couple of hours, since this is a smaller time frame, we were able to hit our TP and secure 143 virtual dollars in this simulation. So I really hope that this was helpful. You should look at the market in multiple time frames. Even though the foreign exchange market is fractal and you can find entries on other time frames, I've learned to trust the higher one because it's a bigger collection of data and the market usually respects structure, right? Unless there's a breakout or something traumatic that happens, the market usually respects structure. But I really hope that this video was helpful. If you liked it, just go ahead and give it a thumbs up. If you learned something, go ahead and subscribe. And if you just want to continue to see more content like this, you can also become a member of my channel by clicking the membership tab. So that's something new that I have here. And if you guys are interested in anything outside of that or YouTube, the links are down below in my description box. But that's really all I have for you today. Until next time, rich friends.